So I know you may be familiar with the stock market. Most people are, but I've always been wondering, and I've been looking for a safer way to invest in the stock market. Now, there's a guy named Phil Town who I've known about for years, and my friend Sean Tepper, who's here today, has created a way to be able to invest in the stock market using some of Phil's methods and have a stock screener to be able to do this. And it's really, really exciting. We're always looking for ways to grow our passive income or grow more passive income by putting things in different uncorrelated assets, which means if one goes down, the other doesn't necessarily go down as well. So Sean, I'm really excited you're here. I was on your show, Payback Time. It's an awesome podcast. Really enjoyed talking with you and decided to have you come on this show. But welcome to Mailbox Money. How are you?
Doing well, Bronson. Thanks for having me on the show.
Oh, I'm excited, man. So we have a similar, we have some similarities in our background as far as some of the things we learned as far as Phil Town's books.
Yep.
He's got a book called Rule Number One and Payback Time. But why don't you take us a little bit kind of back further than that? Just talk to us about your investing journey, some of your career journey, and kind of how you got where you're at now.
Absolutely. So my background is about 15 years in software engineering. And the first 5 years I had an agency. So I was building software applications or websites for small, mid-sized businesses. This was through the recession. It was it was one of those time periods you could say I learned a lot, but I didn't really make a lot. And got to work with about 400 different businesses. I grew the employee base, the team. So as we increase revenues, we also increase liabilities, payroll. So it was a service model. And I learned at that point by working with different companies, what's a scalable model and what's not. I kind of arrived at SaaS, learned that software as a service is highly scalable, but did not have an idea at the time. 2010 hit, went through a merger. We actually did grow a little bit that final year. It wasn't like a big paycheck was written. I could ride off into the sunset and hey, here's early retirement.
That'd be nice, right?
Exactly. It was not that. The benefit though was all debts and liabilities were wiped out at that point through the merger. So, all right, fresh start. And I knew I wanted to get into investing, like get really serious about it. So I started angel investing, which is essentially investing in private businesses. Like, hey, I'm a smart guy. I was in my upper 20s. I could build and sell a business. Of course I can do this in a tech world. No, did not do that. But again, I did learn a lot. At the same point, just to backtrack a second, when I left the company, because I didn't have a SaaS idea, I took kind of an easy route and I just wanted to work for larger corporations. And I worked for like GE and Kohler and a few others. And that was actually very beneficial because it helped me understand how do large businesses market, sell, and operate? Like, how do they scale? So it wasn't in love with working for corporate America, but it was really beneficial because I learned a lot. But anyway, angel investing wasn't working. Finally had to make the decision, let's start taking this serious, leverage compound interest, but let's do it the right way. Let's use the stock market, the public market. So that's when I went down the YouTube rabbit hole, read a ton of books, of course, following Warren Buffett and Charlie Munger, and knew their strategies were sound. But how do I actually, using a software engineering mindset, how do I actually determine good stocks and stay away from bad stocks? Because I know Warren and Charlie and a lot of these guys that have been there and done that, they have a process and they're not using emotions, right? They're not using feelings, they're not gambling, which tells me they're using some sort of math. And fortunately, I came across Phil Town. And I picked up his books. His language was a lot more approachable. It was like very much addressed to the layman. And he didn't use these complex $20 words, which you can find in finance. And I'm like, okay, this is my kind of guy. And he's just a down-to-earth guy, really approachable. And I started reading his books and found out he's giving away the math. He's actually showing some. And prior to that, I tested a lot of math that I found out there, and most of it does not work. Well, I put his to the test. And as he states, you should be making 15% or more in the stock market. I'm like, okay, let's do this. And this is about 2015 or 16.
Let me slow you down for one sec, Sean. I just want to say something real quick because we talk a lot about Warren Buffett. We talk a lot on this channel. We talk a lot about Warren Buffett. We talk a lot about Charlie Munger, just the different geniuses that are out there. And even Charlie Munger one time said to Warren Buffett, he's like, or said about him, he's like, I've never seen him actually do one of these discounted cash flow things. He kind of does it in his head. But some of these guys, they just seem like such geniuses. It can be so intimidating. Like I could never do what they do. And so when somebody does have some sort of system or some sort of thing like Phil Town has, and his books are awesome, and he kind of breaks down all the math. And so that's what I guess really spoke to you, right? Is here's a way I actually can use this and I can actually take it.
Yep.
And you're a software, you're a math guy. There's a way to kind of make all this work. And so you found a way to kind of make that work for you.
Exactly. And I'll just summarize this next part and we can dive into other questions, but essentially created an Excel sheet that sums up to a point system. Higher the points, safer the investment. And it also factors in the margin of safety, which is, you want to be looking at the sticker price or fair value of a stock, not so much the share price. And margin of safety is, just to summarize here, it's that discount off the fair value. For example, let's say you get a stock that's at $100, but the fair value is $200. There you go, 50% off. Warren Buffett, Charlie Munger always talk about, you want a stock that's got a margin of safety of 50% or more. Anyway, created this Excel sheet, used it for 4 years. Average returns were between 15 and 50% those years. And that's when I went to some institutions as well as retail investors, just regular people like us, and asked them, hey, would you use this? And everybody was like, when are you going to turn it into a software? So I'm like,
Yeah.
all right, 10 years later, I've got my SaaS idea. It only took 10 years.
So when you say SaaS, so SaaS is the software as a service. Okay, right.
Yeah.
And so I want to say one thing about this real quick, because and this is honestly the book that changed it. I read this book probably about 5 to 7 years ago, and this book called Rule Number One by Phil Town, it really changed how I looked at the stock market. I felt like I could actually take a stock, and within like just a few minutes, I could tell what the fair price of that stock was worth. And to me, like, that was completely game changing. I couldn't tell you why Apple was this many, $500. I couldn't tell you the different, why they were, a certain amount, but this gave a way to do it. And so your system, you created a software system that kind of does this for you. So I know Phil Town, he kind of talks you through how to do it, but like, you got to have spreadsheets and you're doing all this stuff. And it can be a lot of, like, he calls it like 5 minutes a week, you're managing your investments, and the rest of the time you're snowboarding. And I was like, I don't know, it doesn't sound like how it works,
No.
but you found a way to become more passive. And that's what I love. And we have a lot of passive investors looking to grow wealth and having, uncorrelated assets. So talk to us a little bit more about kind of how it works. It has to be 15 to 50% per year. Historically has been pretty great. So talk to us about that, like how that's been developing it, maybe how you've changed it, how much time does it really take to use this product, and what's the cost, and just talk a little bit about it.
Well, I can tell you the Excel sheets definitely took more than 15 minutes, but they were very much inspired. About 70% of the math from Phil went into these. I added my own calculations, and then my team, especially my CTO, he kind of made some changes too, and really, and nobody really needs to know what's going on behind the scenes. But if you are interested, any listeners out there, we are open source. You can go to ticker.com. There's a calculation section. You could literally read all the calculations. If you wanted, you could go create your own version of Ticker on your own. We're very much about transparency. Of course, we hope you stay with us, but we're all about trust, transparency. So what it does is, and this is not, there's not anything like a secret sauce or a magic bullet. This is really logical stuff. And I'll kind of make it similar to real estate investing. Is we look at the revenues, the net income, which is the profit, and you get EPS, which is earnings per share, which is essentially your net income divided by the outstanding shares of a public company. Then we look at free cash. We look at debt, right? We want lower debt. We want higher assets, higher equity. And all these metrics, we analyze them over the duration of 5 years and then give a point system from 0 to 100. 100 is the safer the stock, 0 is the riskier the stock. So the GameStops and the AMCs of the world, I can tell you right now, those are going to be high risk. And our platform, it makes it really easy to make a decision. It's either on sale, green, watch, which is gray, and then red is overpriced. So you'll arrive there, you want to look for on sale stocks, and you're going to find the best of the best, although we do teach investors that you don't just want to stop at the numbers. This is where a lot of investors make mistakes out there, is they stop at the numbers, but you also want to look at what Phil Town teaches, the 4 M's. Get the margin of safety we take care of for you. That's the math part of investing, but you get the meaning, the moat, and the management. Real quick summary. Meaning is the business model. Will be around in the next 10 years. Moat is the competition. Management, that's your CEO. That's your quarterback. Who's leading the charge, right?
But yeah, the importance of all this, and I think the amazing part is that it gives you a tool to be able to do this. So, so I know you mentioned there is some additional work you need to do. Obviously, all the stuff that Warren Buffett talks about with having a moat and looking at the management and all this stuff, it does take some time to do that. So how much time, let's say if I'm managing a portfolio and I've got, a certain percentage of my net worth in this type of
Mhm.
strategy, how much time do you think it should take in a week or a month to kind of manage things in general?
Sure. Now we can achieve Phil Town's benchmark of 15 minutes a week,
Okay.
literally. And we, like our tool, you can log in. There's about 30,000 stocks around the globe because we have customers all over the world. And you can come in, you can find on sale stocks in seconds. So there you go. The 4M analysis, we actually, when you click on each stock, there's a little button that walks you through the 4M analysis. So it helps you find the meaning of the business and really land on what's good, what's bad, and of course the competition and then the management. And by the end of it, it will significantly increase your confidence with buying that stock or not buying the stock.
Right. So can you give us an example of, I imagine there are certain
Mhm.
sectors that would be on sale, but there's other factors going on, right? Like there's some major
Sure.
problem with that. Like let's say cruise lines went on sale in, 2020 and it was
Mhm.
like, oh, these are just a screaming deal. But it's like, well, we don't know that cruise lines are going to come. There's some risk around that. So is that stuff that you kind of have to mostly ascertain on your own and just figure out, okay, what are the kind of risks of this business or this sector in general?
Some of it you do need to do some homework on your own. That's why one thing about investing is you want to invest in what you know. Like me, my background is 15 years in software engineering, so I my portfolio is all tech. And that's another thing, quick segue is and when you log in, how we're different, you can actually see what I invest in, and so you can
Okay.
invest side by side with me if you
Nice.
really want to.
I was
It's
actually
all
going to
tech.
ask you that too. I was going to say,
Yeah.
like, do you have a way that we can peer over your shoulder? Or you have some sort of
Yep.
way. So you do have that. That's a part of it. Okay.
Yeah.
Cool.
Now, the sector that I do not invest in is pharmaceuticals.
Right.
I don't know a lot about pharma. I just stay away from it. So cruise lines, like if you know about the service industry and that, the travel industry, power to you, like go for it. But if you don't really know that, then maybe you want to gravitate to businesses you work for, like industries you work for. It's a little easier to invest in.
So what do you recommend? I mean, because I remember for a while there were stock screeners that I was using that I look at this kind of similar to like a stock screener.
Mhm.
Obviously, there's a little more work to do it, but what sort of, obviously no specific advice for anybody, but
Sure.
what do you generally say is a good luck guideline when people are getting started out? Is it like put 5 to 10% of your net worth in a strategy like this? Is it, is there any kind of guidelines for it if you're kind of actively
Sure.
managing in a way some of the stuff on your own?
When you join Ticker, we have an onboarding sequence. It's 20 tips over 20 days, including like how much do you allocate, when do you buy, when do you sell, what happens when the market goes down, how do you react, all that kind of stuff. Of course, you don't have to wait all 21 days. There's a link in your first email that says you can just read it all right away. I'm going to skip right past it, right? In this case, you want to get started with like we're talking between 100 and $1,000. Really simple. And your first goal is not to make money in the stock market, it's just to increase confidence. It's like jumping into the
Right.
deep end of a swimming pool. It's like you take that first step, you buy that first stock. That's the big leaping point for most people, but if you can do that, after that it becomes a lot easier. And then we recommend your percentage question between about I think we've got in there between 10 and 15% of your monthly income. I think a
Okay.
little higher if you can is a great starting point. If you can't do that high, that's fine. You can work towards it, but that's a great benchmark.
It's always hard in investing. I used to be an investment advisor in the past, and Sean, it's hard to tell people. Well, you really can't tell people what they should invest. You can give them suggestions or guidelines or whatever, but the SEC, they kind of make it really. And I think there's it's good. You shouldn't tell, hey, put all your money in this or 10% or 5%. There's certain guidelines, but it can be tricky because everybody's situation is different, and that's the thing that's
Right.
kind of tough. And of course, they have all these licenses and things out there for people that are actually giving advice. But yeah, that's awesome. And so when people are in this, I know we were just talking before. I said this is going to be like informational for me because I know we connected, and I was like, oh, I need to get on this
Sure.
ticker thing. It sounds awesome. But so what's when someone's doing this? I was going to ask, like, what are I guess the people will get tips if they start out, but can you talk a little bit about kind of it's a monthly or it's an annual fee or how does it work?
Sure.
And what are some of the things people like about it or even some challenges they have kind of getting used to that?
Sure, sure. So Ticker is what we call a low touch business to consumer SaaS. What that essentially means is it's kind of like Netflix. The prices for other screeners out there are about $30 a month. We're about that. We're $29 a month, or I think it's a 30 to 40% discount if you go with annual. But it's a 14-day free trial. A lot of people we recommend just try it out. You don't have to add your credit card. You can literally plug in your name and email, and you're off and running. So low barrier to entry, and with our platform, how it's different than other platforms. Number one, yes, we're open source. Two, you can see my portfolio. We do a lot of free webinars. I actually do a webinar like 1 or 2 free per month. We have a really approachable community, you could say, in our Facebook group. And we do not attract the fin bros out there, finance bros. I'm sure we're all familiar. You'll see a lot of them on Reddit and Twitter. You mention one stock and you got 50 guys ready to punch you through the monitor. Just power down, fellas. Our community is not like that.
Yeah, that's awesome. That's great. Well, let's shift gears for a minute here. I want to also talk a little bit about you and some of your investment experience as well. Because I know we've talked a little bit about, real estate and other things that we do and stuff like that. But talk to us a little bit about other things that you like investing in. You said that you did angel investing. Have you done real estate investing, or what are some other things you've invested in? And
what I like to invest in is I really like tech businesses. And although the first few years, like 2010 through 2015, never had any big home runs, learned a lot, made some money. But then after getting into the stock market and continuing to work for large corporations, now at this point, I like to stick to what I'm good at and what I know. And I would say I'm pretty good at stock investing using Ticker, really cuts a lot of the noise out. And after I see a stock that has really good numbers, like a really high rating, I can pretty much arrive on a really solid business model. The meaning, mode, and management in the tech world is really easy for me to understand. So my confidence is super high there. Long-term vision here. I'll probably invest. Like there's a few other angel investments I've made. I don't think I can disclose them because they're about to go IPO here in the next 12 months. Whenever the market starts rallying, they'll go. But I'll continue to do that. And I could see maybe a venture capital firm spinning out at some point where I help other tech businesses. There'll be mentorship along the way, but I just love investing, and I love investing in tech. I have a lot of respect for real estate. I know you being in real estate, and a lot of my guests have been on the show, love real estate, and I really respect it. But for me, it's a time investment to get up to speed and to learn. And there's a lot of stuff there. For me, I've got a system that works. I'm producing some residuals from the private investments I've made. And I've got my own company. That's where all my focus is at this point. And aside from that, like I've got a lot of hobbies, and I gotta pick and choose. What do I want to do? Do I want to sit at a laptop and learn new things about another investment asset like real estate? I could, but right now I'm in my primetime season, summer in Wisconsin, and
yeah, you got to get those golf sticks out there and go hit it up. So I just saw recently on your show, you had a friend of mine, Vikram Raya, who's a great guy. He was on your show recently, just very knowledgeable former physician. But it's interesting, kind of what you mentioned is in alignment with this as well. But I've heard people say, whatever you have, whatever you know, whatever you do, you have an edge in that, right? So you've got an edge when you approach software and you approach angel investing, and you have an edge there. I have an edge in real estate. All of us have edges and different things, meaning we're a little bit ahead of the average person, or way ahead of the average person when it comes to these things. So it gives us the ability to see deals that other people can't see, which is awesome. But now what do you like? There's the downside of that though, too, is that I can be fully invested in real estate, or I've got 85% of my net worth in real estate, or you have maybe a lot of your net worth in stocks or in other sort of tech investments. So how does somebody get more educated kind of outside of or how important is that, do you think, to get educated outside of what you have an edge in?
Well, I got to go back to Phil Town and invest in what you like and invest in what you know. And that's the same thing with Warren Buffett. And don't stress too much about trying to learn new industries. You can a little bit, but I'd say, a platform like Ticker is going to guide you along the way. Phil in his books, he always talked about like, hey, if you like restaurants, which I think a lot of people do, right? Maybe start targeting some restaurants with better financials. Well, Ticker can guide you there in seconds. But yeah, some people get really stressed out. They want to deep dive the YouTube rabbit hole or read 1,000 books, and it's not really necessary. It's stick to what you know and just continue to focus on that.
Yeah, no, I think that's a good word to be able to focus on what you know and not make it too
Mhm.
difficult. So I know, like, obviously stocks are publicly traded. There's something anybody can get involved with.
Mhm.
Angel investing, that typically takes a good network. It takes certain types of events or just people that you come
Mhm.
across. What's a good way to, if somebody's trying to say, hey, how do I get in the angel investing world? Like, how do I get introduced to that, or how do I find people? Obviously, there's
Sure.
people pitching all kinds of things, but how do you like get to be more knowledgeable about angel investing?
Yeah, what I would do is a lot of the larger cities around the country in the US have some kind of a startup community. And you can get involved there to see what people are creating, what kind of products they're working on, whether it's software or hardware. And that's a great way to get in to know what's growing. You really get on the front line because these people will tell you about trends that are happening right now and what could potentially get ahead of it. Now, angel investing is high risk. The reason is these are a lot of cases they're either concepts or they're new businesses with really small financials. And I really like the stock market because these are businesses that have proven product market fit. They have a consumer base. Most cases, they have multiple streams of revenue. That there's a lot more safety there. And a lot of these businesses, regardless of how the economy's performing, like right now, these businesses are going to continue to sell their products and services, especially the best in class. Whereas angel investing, you might see a company that looks promising. In most cases, these businesses are not going to survive. So it is high risk.
Right, right, and that's what I've heard. You'd be really successful if invest in a fund that does venture or angel
Mhm.
investing, or you're expecting most of these businesses will fail, but the one that actually goes will be like a 10,
A
50, or
thousand.
100x, yeah,
Yeah,
1000x. It'd be the next
right.
Uber or something, which is like, oh, but at the time, not everybody thought Uber was a great idea. We didn't know, obviously you don't know what you don't know, that was going to take on the way it did, or take off the way it
Right.
did. So a question, I guess, on that note, when it comes to stocks, angel investing, real estate, obviously one way to limit your downside is to invest in what you know. But is there other things that you can say? Maybe let's just take stock investing for example. You see something in your screener, it pops up. It's like, oh, this looks really interesting. But what are some other ways that you can limit your downside in what you choose to invest in?
Yeah, so Ticker will soon be adding ETFs or index funds. Essentially, an ETF or index fund is a bundle of stocks. It could be between 100 or 1,000, sometimes a few thousand stocks. And if you buy an ETF, it's pretty much buying a market. And you can buy that, and it's like a market like this, it's going to go down a little bit, but it's not going to go up a lot.
Sure.
Whereas stocks, you have to be prepared for some volatility. Like me, I hold 10 stocks with Ticker. We do recommend holding between 10 and 15. That's where the real wealth is built. That's where you can get those bigger percentages. But you have to be ready to ride that roller coaster without fear. Like right now, I've rode my roller coaster down. It's gone way down, but it's the biggest tip that Phil Town provided is stockpiling, which is taking some dry powder, in other words, some cash available, and deploying it when the market goes down.
Yeah.
So really, to summarize, two options there is you want to play a little safe, go into ETFs. You want something that's going to build bigger returns, compound interest. We're a big fan of that. That's where you go for individual stocks.
Yeah, Warren Buffett, I just did a video on this recently about, he talked about the number one investing trait an investor can have. And really it wasn't, IQ, it wasn't being smart, it was just basically the first thing was temperament. Basically that, for a lot of investors, they lose their crap when they're like, oh my gosh, when things start crashing or they start going down. But great investors will say, oh my gosh, this is the time to, I guess Phil would say, load the truck up, right? Like,
That's it.
back the
That's it.
truck up, load up. And so if stuff goes down 50%, like, I want to buy more. I don't want to sell. If the investment story hasn't changed, then that's the time to buy more. And that's where you see people, and I know people that have just made ridiculous amounts of money by investing in times where there is that term like blood in the streets, right? Just everybody's
Yeah.
afraid, or we don't know what's happening, whatever. So yeah, I think that's really awesome, man. So let's talk just real quick, kind of as we wrap up here. Tell us a little bit about maybe outside of your tool that you have. Was there another resource that's maybe helped you with your investments? Whether it would be stocks or learning about angel or investing,
Mhm.
or anything, either a book or some sort of resource or app or something that you recommend.
So Phil's two books are a great start. We do recommend those on our site. You got Rule One, another one is Payback Time. And then I do like listening to Motley Fool Money. They've got some recommendations on there. Of course, they don't say they're recommending, but they'll talk about stocks. And I always like to, if it's a stock I haven't heard of, I'll go right to ticker just to see if, is it a strong stock, like strong financials, or weak? So Motley Fool is good. And then there's another one called We Study Billionaires. I'll listen to that one every once in a while. Those are probably two of my favorite stock related podcasts out there. They're really good.
That's awesome. Well, Sean, I really appreciate you, man. And right after this is over, I'm going to get on and download your trial so I can get on there and experiment with it, try it. I had a season where I was doing a lot more stock investing. And I think having a tool that helps you to be able to create some more margin of safety and to help you have some guidance, and I think is awesome. And the ability to kind of see what you're doing too is very cool. So appreciate you taking the time. How can people connect with you if they want to learn more?
Easy. Just go to ticker.com. That's TYKR.com, or just find me on LinkedIn.
Awesome. We'll put some links in the show notes as well, so we can kind of get you there, get you connected as well. But Sean, appreciate you coming on. Thanks so much. Appreciate the time today.
Thanks, Bronson.
All right. So a few takeaways from this show here. Sean Tepper, great guy, has created a way to make stock investing more safe and make it more appealing. These two books, if you haven't read them, I highly recommend Phil Town's books. He's got two. One's called Rule Number One, which comes from the saying of Warren Buffett: rule number one is never lose money. And rule number two is don't forget about rule number one. So he's a student of Warren Buffett, gives some real specific tools on how to be able to get where you want to go. And then, Sean talked a bit too about really, going with where you have an edge, right? The things that you understand. So he's like, I don't invest in pharma, right? Because he doesn't understand pharma. He's a tech guy. He understands certain things and other things he does not. So encourage you to check it out. We'll stick a link down below. If you're interested in connecting with us, we also have great deal flow. We've got some really exciting deals we're looking at right now. So if you're not on our deals list, you need to jump on there. It's bronsonequity.com/join. We'll start a relationship with you. We've got multifamily. We've got a fund in the ATM space that we're working on. We've got all kinds of stuff in the pipeline, which is great. So we'd love to connect with you. We can't share these deals with you unless we connect with you. So hope you found a value in this. Please, if you did find some value, please share this with a friend, give us a 5-star review, and we'll look forward to seeing you on the next episode of the Mailbox Money Show.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.